Hello, everyone. Welcome to Compliance Quick Cuts. I'm going to do some quick introductions here, and then we will jump right into the topic at hand since the whole goal is quick. So I'm Travis Schwab with Eventus Systems. Joining me is Julie Dixon. We did a webinar a couple weeks ago. New to the team here is Nicholas Wendland. Nicholas is with Faegre Drinker. He is in the investment management group representing financial institutions and market participants and helping them navigate complex regulatory landscape issues, offering business-minded solutions. Before Faegre, Nicholas was at FINRA and Market Reg and general counsel of a global proprietary trading firm. Welcome, Nicholas, from a dairy farm in Wisconsin.
Yeah, got to get back from milking.
Yeah, exactly. So one other quick housekeeping item before we jump right into the topic here. Last couple weeks ago, Julie and I were talking about short sale restrictions being placed really around the globe, thankfully not in the US, as a response to the increase, kind of the surge in volume and volatility. Last week, the World Federation of Exchanges released a research report, which was basically a review of the various academic papers over the last 10 years talking about our short sale restrictions efficacious. And their summary matched ours, that A, they don't work, and B, they actually exacerbate the problem that they're trying to fix. So always nice to get support from such a good institution, important institution as the World Financial Exchange. So anyway, just wanted to throw that out there. So talking about viewpoints, Compliance Quick Cuts goal is to take something ripped from the headlines and provide some color and commentary for you in 15 minutes, in and out very quickly. What we're going to talk about today is market data. And this debate about market data continues to rage really around the industry, and it hasn't stopped for years. And the SEC over the last, really this year, has weighed in with a redo of Reg NMS, kind of folks are calling it Reg NMS II. The SEC issued an order last week talking about one of those components that they've been releasing now since the beginning of the year. And that idea is around a new governance structure for the NMS plan. And they're basically giving the exchanges and FINRA 90 days to come up with a brand new governance structure, dramatically consolidating the three entities down to one and removing a lot of the conflict of interest and potential bias in the existing infrastructure. So topic today, high level, can exchanges be unbiased about market data? We already can see that the SEC feels like there is definitely some bias in that structure and thus the order. So Julie, you have clients, you have exchange clients, you have buy-side clients, you have sell-side clients. Why don't you give us some anecdotes from those client engagements with the exchanges about market data to give us some color on your involvement with this debate.
I think it's most important to understand, and exchanges are for-profit businesses, and the exchanges are incentivized to drive volume to their exchange. So you're certainly incentivized to drive volume to your own exchange, and you're incentivized to operate at a profit. So I think that in working with exchanges, the exchange teams always want to follow the rules, and the exchange teams are always very committed to regulatory compliance, but they can't forget that they need to operate as a business. And I think that market data has become such a tremendous source of their revenue that it drives some interesting and challenging situations for market participants and for the exchanges. And I think that the thing that troubles us sometimes in trying to work with clients, our clients want to follow the exchange rules also, right? The clients want to follow the exchange rules, but they are really hamstrung by billing from the exchanges on these fees. And so what we find is that they are oftentimes subject to market data audits where the exchange will come back and say, sorry, you owe us some additional capital. That you didn't pay the full bill, which is tough on them because they don't run the market data programs the exchanges do, and they don't have a second source. So if they become unhappy with how the exchanges are managing their interactions with them from a market data perspective, it's not like they can go shop it and go try to find that data elsewhere. There's an issue of speed, and I think that hopefully what they're trying to do here is trying to make this a little bit more fair process and make it, and I found it very interesting to see how much governance there was on this. But we do see problems with billing, and we see problems with these audits where, you know, it's very hard for our clients sometimes to anticipate what the audit findings might be because those records aren't that great. So.
Thank you. No, I couldn't agree more. And Nicholas, you obviously are representing clients, you represent exchanges. You know, all three of us have exchange-based clients, so we want to be, you know, balanced in the response, but these are big entities. They have really, you know, monopolistic view of their activity and their data. How has that affected your clients up to this point?
Well, I mean, you know, the question as to whether exchanges can be unbiased with regards to market data or not, I think is likely, you know, probably not. They're going to represent their own interests, and that's what you would expect any you know, entity to do. It's not necessarily, you know, improper. And I want to go back to something that Julie said with regards to her clients, you know, having interactions and difficult interactions with exchanges regarding fees and audits. I mean, a lot of that arises because of the complexity of the arrangements and the complexity of the contractual agreements that you have to execute when you sign up for this data, right? There's an entire cottage industry around, you know, service providers and software providers that just help you unwind what a market data contract requires you to report, or what type of tier you are in, or what your monthly or quarterly liability is, you know, given your market data needs. These contracts are complex, and they change consistently. I don't think that's necessarily something that they've done intentionally, the exchanges that is, but this is extremely valuable information that they have. It is, you know, it's a business line of theirs. It's a revenue stream of theirs, and they protect it, you know, as best as they can through these kind of complex contracts and arrangements. You know, I think in terms of what NMS II does and whether it's going to kind of solve some of these problems, I don't necessarily, you know, I don't know if I'm going to hold my breath on it. The market data is, like I said, valuable to these exchanges. That's not going to go away. You know, there's no structural changes, at least yet, that the SEC has put out that would kind of allow market participants to, you know, pull this data in a less expensive way elsewhere. So you know, I don't really know. You know, you can kind of get what the commission is looking to do. I don't know if it's going to accomplish that. And you know, it's just come out, and I'd be interested in just kind of your guys' thoughts on what you think potentially, like, unexplored downside risk of these changes may be.
Yeah, I mean, I'll just kind of talk about our client experience with market data and the exchanges. Every single engagement we have with a client, outside of exchanges, but even exchanges that run broker dealers for their, you know, to route orders away, has to have a, you know, fairly specific idea and detailed level of information about what they want to do for market data. And it's driving risk and surveillance decisions every day. The cost of market data drives risk and surveillance systems. And I am a absolute capitalist free market person, but if people are making decisions that make the market less safe, that is not based off the cost of the market data. That's probably not an outcome that people are wanting. And so I don't know a great solution, and the solution so far, the governance solution that the SEC proposed last week, is really just the start of kind of this removing of the bias. But every single client we talk to, one of the driving factors is, if I go real time, that means I'm paying real time market data fees, which are, you know, multiples of a 15-minute delay or a end of day delay. And it drives our business decisions as a vendor in the space, where we have 4 market data vendors that provide us with data. We have agreements directly with exchanges. We've tried to remove ourselves out from all of the auditing and everything else, just just and outsource that to market data vendors, but it's very challenging. And it consumes a ton of cycles, and that's not what we do for a living. Like, we try to provide our customers with trade surveillance market risk solutions. We hoped that the market data issue was kind of solved, and that has been kind of wrong, the short answer. So, Julie, I'm sure your clients are dealing with the same thing.
Well, I think I want to step back for a second. And I think one of the things I find really interesting is, like, we've consolidated. When you think about what happened to the options business, there are so few options market makers left that it's amazing, right? So that the options market maker flow in the United States is down to just a few players. And part of the reason it's down to just a few players is that spreads are very small and you have to do a ton of volume to make money. And part of the reason is that the barrier to entry in terms of cost is huge. So does the market really benefit from having all this flow consolidated in a few firms? You know, I don't know that that's really the case. I think that, you know, you'd like to see a lot of market participants providing a lot of liquidity, and you'd like to see that diversified in order to provide, you know, a market that can operate in any conditions, and that's resilient in the event that one of these people fails. And I think this cost of market data, it is a challenge. It is a challenge because you're right in that the SEC, you know, in the ideal world, the SEC will, you know, ask you to do something that is within the means of a small and a medium and a large size firm, right? That you can execute on no matter what size you are. But the cost of market data does make surveillance a real challenge. And we absolutely have seen people walk away from some of the more real-time surveillance that would give them a better idea of where they were on certain metrics due to cost. We absolutely do see it. And I think that if this does reduce the cost and allows smaller players in, I think it's a win.
And Julie, I don't think, you know, in terms of the consolidation or the elimination of market makers in the marketplace is exclusive to the options side. I mean, it's not like there's not U.S. equities, there's not a lot of U.S. equities market makers. I mean, or even like slightly different, you know, but on the futures side where you've got consolidated data by exchange level as well, you know, there's very few liquidity providing players that are in those markets. I think that you know, the cost is not just market data, it's you know, the co-location, the access, you know, the cross connects, the, you know, the proximity to the servers, you know, the various, you know, placements of, you know, hardware in the data centers. These are all like really expensive endeavors. Do you think you're ever
some data to support exactly what you're talking about? So SIFMA did a report last year, and from 2010 to 2018, depending on the business, the type of business that it was, their market data costs, and that includes everything that you're talking about, the, you know, physical connection, the market data, the licensing fees, the colo fees, went up anywhere from 967% to 2,916% over a 8-year period. So it's, and for the same data, is basically SIFMA is making that case, which we know that SIFMA has been driving that conversation probably to the SEC, saying this is the case, this is the study. We need better representation. We need the exchanges to be able to be more balanced as part of this conversation. And even we were talking about Members Exchange, which just got approved a week or two ago, was really founded on the fact trying to simplify the connectivity.
Yeah, it's a reaction to the market costs that everyone's facing. I mean, the Members Exchange is obviously, you know, backed by a significant, you know, market participants, players in the market. But, you know, I mean, do you really think that you're going to see somebody just start up a brand new options market making firm? You know, are they going to go to all, whatever it is, 13, 14 exchanges, you know, pull in the market data for all of them, you know, or get the co-location set up? You know, the costs are just so, the barrier to entry on the cost side is just so expensive that I don't really see somebody just kind of starting a new firm, a new market making.
Very difficult. You know, I'm sure Julie, I'm sure you've seen the same thing. It's just once these customers that come to you and say, hey, we want to start a broker dealer, they start looking at the costs, the physical costs, and they're like, wait a second, this is a big lift.
Right.
It is big. The floor is still quite, oddly enough. The floor, I'm fascinated by the fact that the floor is still there. Our new startups have been more interested in the floor than anywhere else. So I'm fascinated by that, and I don't know how that's going to go. I don't know how many startups we'll see, but boy, I just don't think as a sort of a capitalist myself and someone who supports free markets, I don't know that I think that a monopoly is that great for our markets in terms of like these markets. I think free market economy should have less barriers to entry. So hopefully we can see that.
Yeah.
So 15 minutes, that's up, quick and dirty. I think we've kind of thought about it's going to be difficult for the exchanges to be unbiased as it relates to market data. Any parting thoughts, Nicholas?
No, I think we've said as much as we can kind of cram into 15 minutes, and we'll let everyone get back to their days.
Yeah, Julie, any other thoughts you want to leave people with?
I can't wait to see how this plays out. I'm very curious to see what the next chapter of this is on Reg NMS.
Hopefully we're leaving you wanting more. We're going to try to do this regularly. Thanks everyone for taking 15 minutes to spend with us. You've seen Compliance Quick Cuts. We'll see you next time. Take care.
Thanks.